If you don't know how to play with time frames, you simply don't know how to trade. It doesn't matter if you're a day trader, scalper, swing trader. If you can't properly top-down analysis a chart, you cannot trade. It doesn't matter what type of trader you are. And if you want to be able to be a sniper trader and constantly win in the markets and become profitable, you have to be able to properly do a top-down analysis in the market so you can actually see what the market is doing on different time frames. Now, before you become into a nerd or want to be expert on only one single time frame, I need you to realize that there's not only one time frame to be successful. You need to be able to manage multiple different time frames at the same time. And these are the main key time frames that you need to know for a top-down analysis. That is going to be the weekly time frame, the daily time frame, and the 4-hour time frame. It does not matter if you're a scalper, day trader, swing trader. You need to have these three main time frames in your top-down analysis so you can properly understand the direction of the market, where it's headed, and how you can find an edge in the market. So now let's get into the video on how you can properly do a top-down analysis, and I'm also going to show you how to actually enter a trade with my personal entry signal that I use every single time I enter a trade, and it raises my win rate by even 20 to 25%. So if you have a win rate of 40 to 50%, if you just add this extra entry stuff that I use, you're gonna boost your win rate by 25 to 30%, which can lead you to about a 70% winning strategy, which is crazy. So now let's actually get into the markets right now, where I'm gonna show you how to properly do a top-down analysis and you can actually have an edge over the market. So let's get into it. So first things first is going to be the actual time frames to do the top-down analysis. So there is hundreds of different time frames. You have the 1 minute, the 2 minute, the 3 minute, 5, 15. You have all these different time frames. You can almost even create custom time frames of your own liking, which is actually, kind of bizarre. Doesn't even make any sense in my opinion, but the possibility is there. And then also you can go down to the seconds and how many seconds and stuff, which is absolutely just ridiculous. If you notice here, I have a star on every single time frame that I personally use. For every single time I do a top-down analysis on any pair on my watch list. So this does not matter the currency pair that you're trading. It doesn't matter if it's GBP USD, Euro USD, GBP JPY. The same top-down analysis applies to any pair, any commodity, any future. Everything is exactly the same, because it just consists of a top-down analysis. The simple analogy that I can put here is if you were to take a car into a shop to do the oil change, it has to pass by the same exact inspection. They have to see how much oil is in it, how old is the oil in there, how many quarts of oil have to be added, and what type of oil. It's the same thing. Doesn't matter if it's a Rolls Royce or if it's a Honda Civic. They have to go through the same oil process to have the standard of what they should do next. Same thing here. You have to go through the standard of what the time frames are doing to determine if you're interested in taking this trade. So these are going to be the main time frames that I use, which is the 15-minute, 30, 1 hour, 2 hour, 4 hour, daily, weekly, and monthly. So I put a star on them so they stay on this top section here, and I only focus on the ones that are needed for a proper top-down analysis. So first things first, what is a top-down analysis? Well, it's pretty self-explanatory. You have to start from the top down, right? It's a top-down analysis. So you want to start off from the highest of the time frame and work all your way down. So you were to start off from the weekly, then after the weekly, you would go to the daily. Then from the daily, you would go to the 4 hour, the 4 hour, 2, 1, 30, 15 minutes. It's just pretty much a ladder that goes from the highest time frame to the lowest time frame. But there's actually a very specific way on how to do it and what time frame you divide from each. So don't worry, it's gonna make sense in literally just a second. So for this video, we're going to be using the weekly, the daily, the 4 hour, the 2 hour, the 1 hour, the 30 minute, and the 15 minute. So this is actually divided right down the middle, almost pretty much. And it's divided right at this section right here. Why, you may ask? Well, that is because the weekly, the daily, and the 4 hour is used for one part of the top-down analysis, and then the 2 hour, the 1 hour, and 15 and 30 minute is used for another part of the top-down analysis. So this part is going to be used for the trend to identify if the market is headed to the upside or the downside. And then this part right here, which is the 2 hour, the 1 hour, the 30, and the 15 minute, is going to be used for the entry of the market that you're going to be executing. So you have a top-down analysis to identify the trend and a top-down analysis to identify the entry, which is actually very neat because this way you can actually build an edge and make more money. So So when you're doing a top-down analysis, you want to start off on the weekly. I have the monthly here. I don't use it as much anymore. Kind of just look at it every once in a while just to refresh my memory from the beginning ways of my strategy, but I don't use it anymore to be profitable. Haven't used it in a really long time. Just have it there. It's kind of like a superstitious thing, right? I like it. So you want to start off on the weekly time frame. So when you start off on the weekly time frame in the markets, you're probably going to see a market that looks something like this. You're going to see very big moves. You're not going to see a lot of rejections. You're not going to see a lot of movements. It just looks like one big blob of a move. Simplest example I can show you is actively what the market has done right here. It looks like one big blob. So if I were to copy the most recent market structure, it looks like one big move like this. Very easy to identify, not that hard to pretty much see what's going on, right? So this market, you can clearly tell that it was going from bearish to then bullish, and that this market has shifted completely at this section right here. Let me actually just delete this stuff. So you can see how this market has gone from bearish to then bullish. This market was creating lower lows and lower highs, and then we broke this structure level, making this a new higher high. Now we understand by doing a top-down analysis that the weekly time frame is bullish. So it's going to look something like this. Now, when we do a top-down analysis, all we're doing is literally zooming in to the exact same price that you are seeing right here. So this same exact move that we have identified on the weekly time frame that has shifted structure, when we go to the daily time frame, all we literally do is just zoom in. All we do is get a little bit closer, and when we get a little bit closer, what happens? We start seeing a little bit more of the detail of what's going on in the market. So this exact same market move is what's going on right here, and I'm just going to go down to the daily because I've already done the top parts of the analysis. Now I'm going to start working my way down, and when I started from the top, I realized that this market is now going to the upside, or this market is going to the downside, whatever the case is. Then I go down to the daily time frame, and I notice that within this same exact market move, there is a lot of structure that is happening inside here. So all I'm simply going to do is just draw out the structure points following the same weekly move that happened on the section to the upside. So if you notice, this is the same exact move from right here on the weekly, but now this is on the daily. So we can identify from a top-down analysis why it's so important on doing it. Because if we were to only look on the daily, this is what we would see, and we would see a bunch of rubbish. We would see literally the market going up, down, up, down, up, down. It's a bit confusing. But then if we look at the weekly, we get a very clear indication of where the masses of the markets are actually heading. And this is actually very key because you could only focus on what matters. Do you want to only take a day trade? Do you want to take an overall of a swing trade? Do you want to take a little scalp trade? This is very important because you can almost do a little bit of everything with the proper top-down analysis confirmation. Because if you were to look at this on the weekly, you would want to pretty much buy because this time frame is currently bullish. But then if you were to look at this time frame, you would tell that it is bearish. Even though it's probably a beginner trader, this might look bullish, it's actually bearish. You can see how the market was here indeed creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. And then we had broken this previous higher low, making this market now bearish. So we've identified that the daily time frame is now shifting to the downside, and this can kind of make a little bit of sense because for the weekly time frame, what this can create is an even deeper pullback. So then the weekly time frame can continue going to the upside hypothetically, but we know that the weekly could have that deeper pullback because the daily time frame is now bearish, and it's simply going bearish to give this weekly time frame the deeper pullback so then it can have the push to the upside. So they're both doing the same move, but one's just pretty much taking the hit for the other one to have the actual move overall. But this is all big hypothetical, right? This is basically what we're having right in front of us right now, and it is 100% a fact, and that is that the weekly time frame is a bullish, and then that the daily time frame is bearish. So as we're going through this top-down analysis, we're like, well, does it make more sense to buy or does it make more sense to sell? But as of right now, we have a 50-50, can't really get a clear indication. That's why we have to go down now to the 4 hour. So we're simply going to get the same exact market move from the daily time frame right here. I'm going to put it right back into place just so we can pretty much confirm that all we are doing is just zooming in. So we all agree that this is the market structure there. Now we go down to the 4 hours. So we already started from the top and we're working our way down. Now, this is currently how this looks on the 4 hour time frame. So for example's purposes, I'm going to simply start it off from this point right here, just because there's a lot of market structure and I can pretty much be all night identifying every single one of these structure points. So just gonna follow every single higher low and higher high that this market created along the way of it heading to the upside, and every lower low and lower high that this market created heading to the downside. So as you guys can see, it might look a little bit messy, but once I move it to the outside, you can see very clearly right here, that came out from that 4 hour section, and that this right here is the original daily structure move. So we're making this very, very simple, very, very straightforward. This is what the top-down analysis looks like on the weekly time frame. This is what the top-down analysis looks like on the daily time frame. And now this is what the top-down analysis looks like on the 4 hour time frame. Everything you're seeing here is the exact same market. As you can tell, it's been GBP USD the whole entire way. The only thing that has changed is that we have gotten in closer and closer and closer to identify what makes more sense. Does it make more sense to buy, or does it make more sense to sell? Because at the end of the day, the market's gonna do two things. It's either gonna go up or it's gonna go down. We're simply trying to find an edge on where it makes the most sense that the market's going to go. And as of right now, that we've identified the weekly time frame as bullish, and we've identified the daily time frame as bearish, we can confirm that the 4 hour time frame is also bearish. Why? Maybe it's a beginner trader, you can identify this as bullish, but it's actually the same exact concept as the daily time frame. This market was creating beautiful higher lows and higher highs heading to the upside, but then this was the last higher low, broke under that structure level, making the 4 hour time frame now bearish. So as you can see, this is the move that fits perfectly inside here, and this is the move that perfectly fits inside of this market structure right here. So every single time frame that we go down, we just get more in detail on what the hell the market is doing exactly. This way we can find an edge on what decision should we take. So based off of this right here, off of creating a top-down analysis, my bias is already making more sense to enter a sell than to enter a buy. Why? Because as I started from the top and I started working my way down with the top-down analysis, it's clearly that 2 time frames are going bearish versus 1 time frame is bullish. So as of right now, that is literally only the first half of top-down analysis, which is going to be the weekly, the daily, and the 4 hour. This is to simply understand the trend of the market, where is the majority of the time frames headed, so we can pretty much create an edge on that direction and take the trade that way. Now, this is what I do personally for myself to catch day trades, intraday trades, and also swing trades. Some of you scalpers out there, or people that are taking even, trades on the lower time frames, you guys don't have to start on the weekly. You guys can pretty much go daily, 4 hour, 2 hour, and then you look for your entries from the lower time frames down. I personally like the weekly, the daily, and the 4 hour, simply because the higher time frames are more respected than the lower time frames. Why? Well, it's because it takes the weekly a lot more time to create a structure point than it does on the 1 hour. In order for the 1 hour to create a structure point, it can literally happen within 4 to 5 hours, which happens very often. But on the weekly time frame, for it to create a structure point, it takes about 4 to 5 weeks to create the same structure point. So what do you think is gonna have a stronger basis of holding price? Something that happens every 4 or 5 hours, that can happen tens of times throughout the day? Or do you think something that happens once every month to month and a half? It's pretty logical in my opinion. That's why I stick to the stronger, because at the end of the day, I want to put my money behind something that is going to give me more odds of making me money versus not. Just doesn't make sense in my mind. So after we understand that this is the top-down analysis for the trend of the market, now we're going to go through the top-down analysis of the entry part, which is very key because it's where a lot of traders pretty much just want to jump the gun and go straight into entering the market. But they got to understand that before entering the market, they have to properly do a top-down analysis to actually be able to execute a trade. So now that we understand that two of these time frames are bearish, I'm just going to remove the one that's bullish because we're not interested in buying at all, and we should not be interested in buying at all. We don't want to take a counter trend trade. Makes no sense. It's a high risk trade. So we're going to only look for reasons to sell. So now that we have our two time frames that are going to confirm to us that this is bearish, we're going to now look for entries on the 2 hour, the 1 hour, the 30-minute, and the 15-minute. So what exactly are we looking for on these time frames in order to take the trade? Now, this is literally where you're about to have a aha moment. You're literally about to tell yourself, wow, I cannot believe that I have not been seeing this so, it's literally like been right in front of your face the whole entire time. And that is, if we are selling, why don't we continue the selling top-down analysis market structure on the entry points? What does that mean? Let me show you. So if we are interested in selling this market right here, we know that this is what it looks like from the daily to the 4 hour here. Now, this exact same market structure, let's say hypothetically on the 30 minutes, just to show you guys very simply with the same exact market that we're currently using, you can see that on the 30-minute, it's going to look very, very different. Let me just bring this here, put it back on where the market is. So we know that we're exactly on the same market that we drew up in this section right here. Now this is just back on this area. So let's look at it on the 30 minutes. So if we go on the 30-minute time frame, you can see how we're just gonna structure up this last section here. You can see how it consists of a lot more structure points, literally creating a bunch of little higher lows and higher highs throughout the whole entire way. And this is obviously happening a lot faster than the 4 hour time frame, than the daily time frame, so on and so forth. So if you notice right here, this market on the 30-minute time frame looks very different than you would want it to. Now, what do I mean by that? It's very confusing. Well, don't worry, it's about to make a lot of sense right now. So I'm just pretty much dragging this all the way back to our 4 hour section, which is going to be right around over here. So what I have done right here is I've literally brought in this zoomed in section of the entry area of GBP USD on the 30 minutes from the 4 hours. So this is the 4 hour time frame. Now this is what it looks like on the 30-minute time frame. So I've obviously only focused on this section here because if I were to pretty much go back, all this would look very rubbish. It would have a lot of different structure points and doesn't matter to what we're about to do right now. So if this is what the 4 hour time frame looks like, and we've understood that this time frame is bearish, just gonna put it here so it's very visual. And this is what the 30-minute time frame looks like. What is this 30-minute time frame doing right now? Are we actively bullish or are we actively bearish? Well, once again, probably to a beginner trader, this time frame might be bearish, but they're actually wrong. This time frame is bullish. This market was creating lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and we have now shifted to the upside, making this 30-minute time frame bullish. So now that this 30-minute time frame is bullish, well, doesn't mean that it's the right time to enter this trade because we are looking to sell, and we can only sell when we have a bearish market. If we have a lower time frame, which is a time frame that we're going to enter, that is against our overall top-down analysis trend, it simply does not make sense to enter the trade. The lower time frames have not shifted the structure yet, making it not logical to enter the trade. So this right here would be a perfect example of a loss that a trader would take, or a position that I personally would avoid. So to make this very simple and very straight to the point, it simply comes down to this. If this is going to be, let's say, the 4-hour time frame, and this is what the market would look like on the 4-hour, and if I were to divide it from 4-hour to then 30 minutes, this is what it would look like on the 30-minute. Let me just make it a very clear, cut-through version of what it could look like following the same path. This is simply going from the 4-hour to the 30-minute time frame. They're obviously exactly the same. This is simply just 4-hour, and then this is going to be 30 minutes. We are analyzing this market, looking to take this trade to the upside. This is where we would wait for this pullback here to then buy. This is going to be the key of a patient trader, waiting for this area to hit to then enter the position. Now, this is where top-down analysis is so crucial, because this pullback right here is going to give you the perfect confirmation that you have to wait. Why? Because now this time frame has gone bearish all the way up to this area in here, and you cannot enter this market as long as this market continues bearish. You could only enter on this market once it has shifted with the overall time frames from the top-down analysis. If the 4-hour and then the daily time frame are bullish, you want to make sure that then the 30-minute time frame is also bullish with the overall time frames. On the pullback, it went bearish, and then we have to wait for it to simply go bullish so we can then continue to take this trade to the upside. The key is when you're going to enter the trade on the lower time frames, you want to make sure that it aligns with the trend of the overall top-down analysis. If you were to write down one thing from this whole entire video, that would be it right there. So pause the video, watch it, and as you pause the video, hit that subscribe button, because this shit right here took me like 2.5 years to understand. And the fact that I'm just putting it in this video right now is actually crazy. So hit that subscribe button right now, because nobody else is making it as simple and as effective as I am right now. Because this alone can boost your win rate by 25 to 30%. So make sure you hit that subscribe button. So this obviously looks very simple on line chart, right? But we don't trade line charts, we trade candlesticks. Let me actually show you how it looks like on the candlestick section. So I'm just gonna pretty much hold on to this for just a quick second. I'm going to show you guys on this very live example that I'm actually very eager to enter right now. So as you guys can see, this is a very clear shift of structure. If we were to start off from the daily time frame, well, let's start off from the weekly, right? Weekly, we can very clearly tell that we have had a lower low, lower high, lower low. Now we've had a higher high. Weekly time frame is actually bullish, but you can see how we have very strong weekly rejection candlesticks, confirming to us that this can pretty much not like this area and have a deeper pullback to then continue to head to the upside, because the overall trend is bullish on the weekly time frame. Now, starting from the top, working our way down to the daily time frame, you can see that the daily time frame has actually shifted structure beautifully. You can see how we have a very valid left head and then a right shoulder. We have confirmed broken through the neckline of that head and shoulder. Well, now this time frame is bearish. So we have two completely different time frames telling us two completely different things. It's 50-50. We want to go with the weekly, 50% of going up. If you want to go with the daily, 50% chance of going down. Well, I'm not going to take a trade on a 50-50 chance. I want to have the majority of the possibilities that I can in order to enter this trade. That's why I'm going to go down now to the 4-hour to continue this top-down analysis. When I come over to the 4-hour, I can very clearly tell that this 4-hour was in a bullish trajectory heading to the upside, creating higher highs and higher lows. And then we had this massive bearish move that has engulfed pretty much the last couple of weeks in one single session, what it did, indicating to us that, well, now the 4-hour is bearish as well, giving us two time frames that are bearish versus one. Now, I want you to ask yourself, what makes more sense, to sell or to buy? Obviously to sell. So now we move over to the entry parts of the actual trade. So you can go to the 2-hour, the 1-hour, the 30-minute, the 15-minute, whatever looks cleaner. I like the 30-minute the most out of anything. So when I go over to the 30 minutes, you guys can see here that in the 30 minutes, we have structure everywhere. We have structure here heading to the upside, then we have structure here heading to the downside. And on this structure heading to the downside, we can see how we created a insane amount of a double bottom, and then we have now shifted to the upside, making the 30-minute time frame bullish. You cannot enter a sell if you have a bullish time frame. What do you have to do? You have to wait for this time frame to now go bearish, and once it goes bearish, then you can continue to take the trade with the overall market. Now, I don't think you guys understand how powerful this is. This is literally the market showing you its hand first so you can then follow it. A lot of traders want to predict the market's hand before it actually happens. Not me. I want the market to show me what it's gonna do. After it shows me what it's gonna do, I'm like, all right, cool, you're actually gonna go down? Well, I'll jump in with you. I don't want to predict that it's going to go down. I want to wait for it to confirm that it's going to continue going down with these other time frames, so then I can actually then jump on the ship with it. It's almost like a hack. It's literally telling you, hey, I'm actually going to start going down to the downside now. The lower time frames are pretty much letting you know that. So when you get over to the 4-hour time frame, you were to pretty much see one big red candlestick going like this, and what you know is that on the 30-minute time frame we shifted. This is where you enter the trade, and then you can pretty much set and forget your way to success, because the lower time frame is confirming that it is going to continue the trend with the top-down analysis of the overall time frames. And you're probably asking yourself, what is this word set and forget, and how can you set and forget your way to success? Like, is that even possible? Well, that's what my students have been doing in the last 3 months. They've been making anywhere from $1,000 to $1,500 a week as a beginner set and forget trader, where they're literally catching trades like this with me every single week on a call that I get with them, and I explain to them my top 3 pairs that I trade for the week that have the clearest and most precise top-down analysis that give us the edge in the market and confirm to us that, hey, it makes more sense to sell at this moment than to buy, simply because the overall time frames are actually going down. Just hop onto the trend to the downside, or all the time frames are going up, hop on the trend to the upside. And if you don't know what set and forget is and you want to know more about it, well, make sure you hit the link in the description below. I have a video there for you that explains to you exactly what set and forget is and how it's changed lives all around the world, and it lets traders make anywhere from $1,000 to $1,500 a week as a beginner set and forget trader. So make sure you guys watch that video. The link is in the description below. I appreciate you guys watching this video all the way to the end. If you want to see more videos like this, make sure you hit that like and subscribe button. And I actually have a video for you that explains to you precisely on what candlesticks are. So make sure you check it out in this section right here. And I'll see you guys in the next video. Take it easy, guys.